Yo-ho, what's going on, guys? What is going on? Had to go a little bit early today. Got some stuff to do, got some appointments to keep, so I figured, hey, let's hop on. Let's get this live stream started, guys. It's a great day to have a great day. It is my favorite day of the week, guys. It's Monday. You know it. I show it. You love it. Jack stacked and fanny packed. Let's get into it, my friends. Let's get the positivity rolling. Ari says, perfect during lunch. Exactly. See, Ari, great minds think alike. I knew you were at lunch, and I was like, I got to hook Ari up with a fantastic lunch break, right? We got to get things going, guys. Okay, let's get on into it. What do we have looking at the Bitcoin chart? Let's have a little bit of a looky-loo here, guys. Well, what we do have is, dun-dun-dun, we have I talked about this morning over on the Patreon, guys. We have a bear flag in the on the daily chart for Bitcoin. So a little bit of bearishness here, more downside pressure. Looks like it's coming in. Most likely we continue to reject, as you can see, off the 30-day moving average. 1, 2, close to 3, 4, 5 out of the last 6 days. Close to rejection. We wicked all the way up to it again this morning and right back down again. So yeah, the breakdown target for this this bear flag, interestingly enough, right close to that $70,000 mark, which is pretty close to the previous cycle high. Right? Let's make a little range here, shall we? So we've got our little range here. Previous cycle high. Let's zoom out a little bit. Un momento, por favor. Right? We take this all the way here. And what do we see? There's the previous cycle high, pretty close to it. So that would be, that'll be right here. So we got to move this down just a wee bit. So there you go, guys. Right inside that range is going to be our breakdown target for this bear flag. So, yeah, we'll see what happens. But that's the target. That's the goal. Will it hold? Nobody knows. Interestingly, over on Blockchain Buzz yesterday with Crypto Archie, him and I had an interesting conversation about whether the previous cycle high of $69,000 for Bitcoin was like $69,800. So let's round it to $70,000. If that target would hold through, or if we would break down below it to the 200-day moving average, right? So we'll see what happens. We will see what happens. Now, just in case you're wondering, guys, I did start doing a series of videos breaking down all of the potential scenarios for 2026 and how we should adapt and respond to these scenarios playing out, whether they're pumping or dumping or somewhere in between. If you want to know all of the possible scenarios for 2026 and how to respond to them, get over to the Patreon. I dropped part 1 today. Part 2 will be tomorrow, so on and so forth, guys. It's 50% off right now, so do not miss it, guys. We only do that sale once a year. So, all right, let's get into the chat. We have 0 super chats to start the stream. Let's see what's going on out there. You Know Me says, hey, Rob, could these price targets for ETH and Bitcoin that Tom Lee and others are giving be a play to get retail to buy their bags? Possibly. It wouldn't shock me. Jake the Snake says, lock in ya degens. We're going higher. Let's go. Hey, Rob, you think Swift coin will hit 10 cents eventually? Yes, I do. It's a me, Mario. Ladies and gentlemen, the show's about to start. Let's get it. Yeah, we had a little bit of a shorter countdown today because I do have a bunch of stuff I got to do. So, Zombie Hunter, what's up, my guy? What are the chances we get over the 200 moving average and continue the bull? You mean the 50-week moving average? Not the 200. You probably mean the 50-week, right? The playbook has been off course this whole cycle. You're absolutely right. And that is one of the possible scenarios I will be laying out in this series of videos over on the Patreon. It is entirely possible, yes. CME for you tonight. Good morning, Rob. Any thoughts on Zebec's next leg up? When it might be? If I look over at Zebec's chart, I mean, Zebec has been in a very bullish structure for a long time now. I know it feels painful, guys, but yeah, it's in a bullish structure. But again, if Bitcoin does break down further, I'm surprised. Zebec had a big announcement today, a big partnership that I am covering in a video, and it didn't pump the price at all, which is a little bit surprising to me. So, yeah. As for a timeline, I have no idea. I'm not going to give timelines right now because people ask me for a guess on when I think something can happen, and when it doesn't happen, they freak out, say I'm wrong, and start accusing me of things and blaming me, right? So as for timelines, I'm not giving those for the foreseeable future, just because people don't understand that it is an educated guess, not a written in stone thing. So I've said a million times that charting is about probabilities, not about certainties, but some people don't understand that. They think that if somebody gives a price target or a timeline, that means that it's 100% written in stone, has to happen, right? And they don't get it. So funky, lots of bulls roaming around. Time to go and poke a few. Let's go. Zebec Stripe Bombshell. Yes, I will be covering that tomorrow with a special guest. No, you're the best, Ari. You're the best. I appreciate you. I hope your lunch is going well. What are we having, by the way? A guy. Hope everyone's having a great Monday. It's a great day to have a great day. Ari says, I really want more Zebec, but I'll stack to your awesome plan. Yes, absolutely. Who the hell is Bernstein? We'll get into it, William. We'll get into it. Jamestown in the house. Danny, what it do, baby boo? Good to see you, brother. Angelo says, I stopped DCing. I'll wait to buy more altcoins when the market rebounds. There you go. A man with a plan. What are the chances? The 50-week? Yes, we responded to that. Do you think we're still going to see that relief rally? That's another scenario that I do think is going to play out. Yes, I do. I do think we're likely going to come up to the 50-week moving average. I think that is entirely in the realm of possibility here. If we go back over to the Bitcoin chart, right? I do think we rally at least to the 50-week here, right? I think we could do that. But right now, we seem to be below our trend line here, and we can't seem to get back above it. So, which is another scenario I will be talking about again. Oh, guys, if you're not over on the Patreon for 50% off right now, you're going to miss a series of videos that's going to lay out every possible scenario for 2026 and how you should respond to it. You're going to miss out, right? Paul, good to see you, brother. Hey, no problem, brother. I knew what you meant. Big Kev says, sorry if it has already been asked, what are your thoughts on Ghostware? I like Ghost. I do. I'm bullish on Ghost. I actually do have a video coming out with them as well. We're coming out covering them as well. So yes, I know they're partnered with Zebec Privacy Coin, right? I will have a detailed deep dive video dedicated to Ghost coming in the near future. Everyone's been requesting it, so I am going to be doing it. So stay tuned for that. All right, we're caught up in the chat already. Holy smokes. Let's get into the news, guys. Let's see what's going on. First off, let's see what's happening over on X. Well, let's kick things off with a clip here from Crypto Chrome. We love Crypto Chrome. Follow Crypto Chrome over on X. Zebec is powering live crypto payroll through Zebec Real Transactions, Real Companies. Let's go, baby.
You know how everyone says crypto payroll is the future? Yeah. Zebec Network quietly built it last year, and no one's paying attention. While influencers were hyping meme coins, Zebec Network was building behind the scenes, running 5 full CertiK audits, fixing every single issue, and walking away with an AA rating and a Skynet score of 86.92. That puts them at the top of the chart for security, and light years ahead of projects that are still just promises. But it's what they built that matters: real-time crypto payroll. Not a buzzword, not a pilot, a live platform, where money streams continuously, like Spotify for your paycheck. Why does that matter? Because legacy payroll is slow, expensive, and centralized. Zebec Network's model is programmable, global, and instant. And it unlocks use cases from freelancers to DAOs to Fortune 500s. Crypto Chrome, digging into this, came across something different. Zebec Network isn't pitching hype, they're solving movement, the plumbing of finance. the layer no one talks about until it breaks. And that's why big players like Coinbase, Circle, Solana Ventures, and MasterCard are already behind them. At the center is ZBCN, a utility token powering programmable finance, not speculative hype. And while everyone else is still waiting for crypto payroll to arrive, Zebec Network already launched it. You just didn't hear about it until now.
Yeah, baby. Bullish on Zebec. To the moon, baby. Absolutely. We've been talking about Zebec before it was popular, man. Absolutely love it. We got more, though. We got more. The ISO 20022, one of the most important innovations of the modern Swift community system for international payments, and Zebec has redesigned its architecture. This was from their spaces.
Simon, which parts of gaining this accreditation are most complex? Because we've been talking about it with you and Zebec for a little while now, like preparing the ISO 2022. There's a deadline that you guys have set internally this month. What's that whole process been like?
Well, it's been quite a year for our compliance team at Zebec, which we've really built out. But what I like to compare ISO to is really the way FedNow was to the Federal Reserve System. ISO 2022 is a step change improvement in Swift's global payment architecture. Richer data, new ISO standards, they let you do cross-border payments in an instant way with much deeper customer data. So for many global institutions and some of our biggest clients at Zebec, it's almost become a non-negotiable to have ISO 2022 certification. And it does require a major upgrade of the legacy systems, which has taken months and sometimes for some organizations years to implement. We're talking about a complete overhaul in data standards, mapping exercises, new operational processes in place for the company, which has been mainly why our compliance team has been so busy this year. But being able to bring on NatPay and work alongside them has been one of the key pieces to Zebec's Rails communicating through a fully ISO compliant network that connects us across Swift's global payment system. So as we've said many times, we are working towards a year-end deadline for ISO certification, and I have no doubt that it will be achieved.
Guys, remember all the people who called it a scam? So good, so good. I hope Zebec and Miria come to Coinbase soon. Yeah, I touched on Miria, I think, this morning as well. Still bullish, guys. So this came out. I do have a deep dive video coming out about this probably tomorrow, guys. Lightspeed Ventures, an early investor in Zebec and key backer for our point-of-sale plans, brings unmatched expertise in the financial technology industry with $28.2 billion in assets under management and 100,000 plus point-of-sale terminals deployed globally, processing $6.6 billion in payment volume. Leveraging Lightspeed's experience and global reach, Zebec is gearing up to launch our ZPIN point-of-sale device with strong demand already driving. Guys, we're still, as bullish as Zebec is, we're still in the early stages of them releasing all of their products. Like, you have no idea how bullish the future is potentially for this project. Another local says, thanks for the Patreon only content videos, Rob. Appreciate the lack of sleep. Will be worth it. Yes, absolutely. I dropped what? I think I dropped 3 videos over on the Patreon so far today. There she is, the one and only Gamma Goddess. Let's get this money. Can I get a hell yeah? All right, let's keep this party rolling along here, guys. We have Lark Davis shared this. The Fed is set to start buying back $45 billion in debt every month starting January. This would inject massive liquidity into the markets. This only means one thing: QE is coming back. But this time they won't call it QE. That's right. They don't want to pump the markets, but they will pump our bags. Here is the news of today, guys, from my brother Alpha Lion. He says this is the kind of infrastructure upgrade that actually moves the entire payroll stack forward. Zebec integrating Stripe plus Privy isn't just another partnership flex. It's a full alignment with one of the most trusted fintech infrastructures on the planet. Embedded wallets built directly into the super app, seamless external wallet connectivity, native multi-chain support across major ecosystems, a unified UX for users, enterprises, and developers. And phase 2 is where it really gets wild. Stablecoin payments, instant cross-border payouts, and deeper access to Stripe network, bridging Web 2 and on-chain rails into a single compliant pipeline. Zebec isn't talking about the future of payroll, it's shipping it. Let's go, baby. Like I said, deep dive video tomorrow with a special guest covering this new partnership. You're not going to want to miss that, and we're going to give you every little bit of it, my friends. Let's get into Tom Lee, since I was asked about it. Tom Lee giving crazy price predictions. Sam says it's absurd to think $10 trillion of stablecoins on L2s wouldn't benefit Ethereum. I agree. Check it out.
A flaw that most people make when I see crypto projects and people talk about crypto tokenomics or crypto economies or whatever economic model, which is that they have static assumptions. They'll say, oh, look, Tom, there's all this stablecoin growth and there's all these L2s, but they're not generating fees for the L1, so therefore the L1 doesn't accrue value. That is the same as someone saying in Facebook, okay, when Facebook launched mobile, and they said, well, Facebook, you're not charging any money for people to actually do mobile. You're actually just, it was free on the desktop, it's free on the mobile, and maybe you can sell 10% more ads on mobile, so therefore it's not really beneficial to Facebook. Do you realize how wrong people were about that assumption, right? Because basically Facebook is a UGI company. So the more people that use it, the more valuable it became as a platform for advertising. And of course the network effects kicked in. And then today Facebook dominates all the advertising business, but that was not evident in 2007. L2s, it may make sense, especially on Ethereum, to let the L2s grow, create a huge ecosystem, and not charge direct proportionate gas fees. Because if this is where everything is going to be built, then the L2 is going to accrue significant value. I think that I think it's really absurd when people say you could have 10 trillion of stable coins and it's not going to benefit ETH because look, they're not charging any fees for that. That's basically Facebook's strategy, right? In 2007, they want to become the standard. So they really want everything to scale, and then they can always modify this business model later to accrue value to the L1. It's early 90s when I did wireless. Everybody I met that was a money manager and really established, the vast majority said the cellular industry is going to fail because the long distance industry is powerful. The local telephone companies are powerful. They're not going to let cellular succeed. In fact, they're going to keep making cellular and undercut pricing so that cellular becomes a free service. So they, number one, that's the incumbency. People saw that the long distance telecom companies had all the money, and these are 50-year-old people. They probably barely found utility in a cell phone anyways, but young people saw cell phones very differently. And not only that, as cell phones grew, it transformed communications and it became bigger than gaming, media, landline, cable combined, because there were so many, not only network effects from owning a lot of users, but you created a whole vast array of new services, including mobile advertising. So if an Ethereum blockchain captures 70% of all RWA and someone says it's not going to benefit Ethereum, that is someone who actually is using the same logic to say new technologies and new applications don't benefit the new entrants.
I would remind you that Miria and Jasmine are both layer 2s on Ethereum, just so you know. The more you know, guys, the more you know. Big John, what's happening? What have we got? Quentin, what's up, my guy? Good to see you, brother. All right, let's get over to Squawk Box. There's a stable view of the economy overall. Defiant ETFs CEO Sylvia says. Check it out.
Now, Sylvia Jablonski, Defiant ETF's co-founder and CEO, and we were talking about some of the positive action we've seen in the stock market in the last week and a half or so, which maybe calm some of the fears that we did have earlier about whether we wouldn't have a Santa Claus rally. In fact, a lot of people said what we normally see in September and October, we were seeing in November. Some of the, we see a lot of lows set in October. I want to start with you with something you said. I thought it was nice. But here's the Wall Street Journal, American consumers sour on the economy. You say for the first time in a while, consumer sentiment went up, and that's one of your positives. So I said, well, how can that be when this is in the, okay, so University of Michigan has been doing this since the middle of the 20th century. The all-time low, and it's a number that can be anywhere from 50, 60, 70, something like that. The all-time low was 50 back in 2022.
Yes.
Last month it was 51. This month it's up to 53. So that's your better consumer sentiment, right off a historic low that happened. That was right after Ukraine was invaded by Russia. So it's sort of like bouncing around the bottom. There are problems with consumer sentiment, are there not?
It's bouncing around the bottom, but it did move a little bit. And
moved a little higher.
It moved a little bit higher.
Before Christmas.
It moved a little bit higher before Christmas. We saw the dip buyers come back in. You know, a lot of what I think about is gauging what happens in the market when we get these pullbacks. Is there utter panic, and do people kind of run for the hills and sell all of their positions? And is it prolonged? Or do we see a short-term pullback in broad-based indices, and do we see investors coming back in? And I think when we see investors coming back in and you start to see broad-based rallies in the S&P 500, which we did see during those bottoms over the last couple of weeks, I think that the investor is becoming a little bit more positive on the market. The broader-based surveys, yes, they are near historical lows. They bounced up a little bit, but I do think that there's a positive outlook for the future in terms of wage growth for middle and upper class Americans. Inflation is softish, you know, jobs are softish, earnings are good. I think that overall there's a stable view of the economy and where we're going.
The one caveat for the journal's piece was that, but spending continues.
Spending
so they point out
continues.
all this, but people are doing things differently than what they're saying. The other thing in the article, it totally is split down party lines. Republicans feel much better about what's going on. Democrats think, you know, it's the end of the world in terms of the economy right now. So that's probably not that surprising, but it's a K-shaped economy we keep talking about. So the high net worth, or not high net worth, but people that are doing a little bit better are spending more. People that aren't doing as well are not. But you see the dollar store ETFs. So they're finding a place to spend it. They're just very value conscious right now, but they're still spending.
Yeah, and they are spending, and I think that that's also a sign that we have a pretty decent and strong base within the economy here, right? And I think that the minute, and to your point, you know, a lot of times what they say and what they do is completely different. So I also take those sentiments with a grain of salt, because you'll see, you know, lower confidence numbers or like a slight pickup, but then you see a big change in spending. Holiday spending, seasonality is on our side right now. So I think that as long as we continue to see a strong consumer spending, and jobs don't fall off of a cliff, you have that stability there.
So, okay, so everything sounds pretty sanguine with you. Some of your long-term concerns are that the Fed could be making a policy mistake in terms of inflation. You think there will be cuts? Is that the wrong thing to do, or you're not sure?
Well, I just think that they've made mistakes before. So we need to see. I think that there's a fine balance here, right? The market expects a cut. The market expects at least a couple of cuts next year. And I think that if there's any kind of divergence from that, or if they go too fast one way or not fast enough the other way, there's impacts to the economy there. So the market is very, very tied to what the Fed is doing again. You know, we talked about this last time I was here. We talked so much about how everything in the markets is revolving around tariffs, and that's the obsession of people. We started almost talking about the Fed a little bit less, and now it's back to the Fed. So I just think that any policy misstep or shakeup from what the market expects leads to volatility.
And AI continues to lead.
Yeah, AI continues to lead.
And that's good. That's okay.
I think that's okay. I think that's good. You know, you're talking about a $300 billion market cap. It's projected by 2033 to be in the trillions, a 9x growth, 30% compounded annual growth rate. The energy behind it is set to grow 8x from where it is now. Right now, it's at about 60 billion. So once it starts getting integrated into the different sectors in the S&P 500, you know, kind of beyond the ChatGPT story, I really think that this is a thematic play that investors.
So we'll hit new highs and even further new highs next year, in your view?
I think further new highs next year. You know, barring any major geopolitical issue, tariff crisis, which we've seen these things happen, right? So they're not impossible, but I do think that the market is set up to continue to run.
Yeah, they have made their mistakes. Let's get into a news piece here, shall we? All right. Carlos says, Rob, do you think Jasmine can reach 20 cents? Yes, I do. Yes, I do. Dave, what's up, mate? What's up, brother man? Zebec, baby, let's freaking go. Absolutely. All right, so Bernstein raises BTC targets and predicts longest bull phase yet. What the heck are we talking about? And who the hell is Bernstein? Let's get into it. That is the central claim of the new outlook for Bernstein, which argues that institutional adoption was rewritten. The market's internal has rewritten the market's internal mechanics. I got the hiccups. Analysts argue BTC is evolving into a strategic macro asset still in early adoption. The firm's note, highlighted by VanEck's Matthew Siegel, suggests that Bitcoin's trajectory has decoupled from the halving-based boom and bust model. Analysts point instead to continued ETF inflows, balance sheet purchases, and asset manager allocations as evidence of a maturing market that responds more to capital flows than calendar cycles. Now, guys, there is an argument to be made when you look at gold. When we saw gold first launch a spot ETF, it actually went on an 8-year bull run. Gold did, right? So what they're speculating here, I would guess, is that Bitcoin may do something similar and go on like an 8-year bull run. I don't think many non-rich Republicans are happy. Yeah. Interestingly, Bernstein says that the recent downturn only reinforced this story, even with Bitcoin sliding nearly 30% at one stage, redemptions from ETFs stayed minimal, under 5% for the analysts. This resilience shows that many large buyers are treating Bitcoin like a strategic reserve, not a speculative swing trade. Bernstein revisited its outlook accordingly. The firm is now projecting Bitcoin to climb to $150,000 in 2026 and ultimately reach $200,000 in 2027. Its longest term forecast remains much more dramatic at $1 million per Bitcoin by 2033. That's just 8 years away. These numbers rest on assumptions about deepening liquidity, expanding institutional access, raising confidence in custody, and new regulatory corridors. I'm trying to hold a cough in. All features that were absent in earlier cycles. So, how long have I told you guys you need to have an 8-year mindset? If you were just to DCA, not financial advice, I'm not your advisor, but if hypothetically, if a person was just to continue DCAing into either a spot Bitcoin ETF or Bitcoin itself for the next 8 years, you could accumulate probably multiple Bitcoins, and they would be worth, based on this projection, and I agree with it, $1 million a coin. Well, you've made your life-changing wealth. It just took longer than a couple of months, right? But again, most people in crypto do not have the patience to do that, right? They want it all. They want it now. I want it all, and I want it now. As a kid, my bedtime was 8 p.m. I couldn't wait to be a grown-up so I could go to bed anytime I wanted. Turns out, that's 8 p.m. I couldn't agree more with you, Candyman. I couldn't agree more with you. So that's the skinny, guys. That's the long and short of it. What do you think? Do you think Bitcoin will be $1 million by 2033? Just 8 short years. Is that 8 years? Yeah, it's 8 years, right? 25, 26, 26, 27, 28, 29, 30. 1, 2, 3. That's 8 years. I was right. Binance insider trading incident prompts employee suspension. You don't say. Binance had insider traders? No. Binance suspended an employee for using insider information to promote a meme coin, revealed by the company's internal audit team, signaling possible legal action. This instance raises concerns about internal controls with major exchanges, highlighting risks even in less regulated crypto assets. Binance has confirmed a staff member's insider trading misconduct involving a meme token, leading to the employee's suspension. The post was made from an official Binance account for personal gain, triggering an internal investigation. The incident involved Binance's internal audit team confirming the misuse of insider information. The employee has been suspended, and Binance announced a $100,000 whistleblower reward split among reported informants. So somebody snitched. Binance's quick action has been praised by the community, who first noted the misconduct. The case highlights ongoing vigilance. I think they just threw somebody to the wolves, threw somebody under the bus. Binance is known for manipulating markets to make money and stealing liquidity from their own investors by liquidating them because they manipulate. So, one employee getting caught for insider trading does not undo all the damage that Binance has done to the markets and to their own investors over time. So I'm sorry, but I don't praise them for this at all, right? You could live a life of extreme evil, and just because you did one good thing doesn't mean you're a good person, right? So, yeah. Sorry, Binance. I don't think so. Not today, Zerg. Not today. Expect a hawkish cut from the Fed this week, says Wharton's Jeremy Siegel.
Get right into the broader markets ahead of this week's Fed meeting. Joining us right now is Jeremy Siegel, Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business. Also, of course, Chief Economist at Wisdom Tree. Good morning to you. What do you think we are going to hear from the Fed this week? And what do you think we should hear from them?
I think we're going to hear what I call a hawkish cut. I think they are cutting 25 basis points. I think there's going to be dissents on both sides. I think Mirren is going to go again for 50, but I think there could be two, maybe even three that want to keep it unchanged. So I think this would be if that would be the case, the most dissents under the entire Powell nearly 8 years that he has been chairman. Of course, as we note, in a few minutes, you're going to have Kevin Hassett. I think in the 70s now as the probability of the next Fed chair, which Trump says he will announce at the beginning of the new year. So I feel I'm sort of a straw man here for maybe what Kevin is going to say, but he won't spill the beans. He won't tell you that he's the man or not. But he certainly has gained in prominence, and what he says is going to start moving the market much more than in the past.
Do you believe ultimately that there's already a shadow Fed, even in without maybe in name only, or without even having a name, that we just know that come this May, interest rates are going lower?
Yeah, I mean, well, you have Mirren already there. And actually, I've been relatively impressed with him. He's put out some good papers. I don't agree with everything on him. I actually wish he would stay maybe after January. Maybe he will instead of going back. I think I think the Fed needs a lot of different voices, and he's certainly one of them. So already he is in the Fed. And yeah, I mean, the announcement of a new Fed official, if it is in January, I think would be perhaps, one of the earliest before the actual change takes place. So, how important will Jay Powell's statements be after that? It's going to be a new Fed. If it is Hassett, it's really going to be a new Fed from what we've had in the past.
What do you think the bond market is going to do if interest rates come down? I mean, this is the one interesting component of it. I know we spent a lot of time talking about equities, but I've been curious about how the bond market has reacted.
You know what? I don't think the bond market is going to move that much down. I mean, my feeling is, and I've stated this for many months, Fed funds rate, if you go back through the last 75 years, has been about 100 basis points below the 10-year. So the 10-year is what, 415 now, approximately. So that would be the low threes. It would not necessarily lower that long rate. Now, what does that mean? That means 30-year mortgages are not going to go down very much. But to say that that's not going to have any effect on the economy is wrong, because there's over $15 trillion worth of loans that are tied to the Fed funds rate. All the short-term borrowing, auto loans, inventory loans, the prime rate, credit card rates, all those short-term rates are one-to-one linked to what the Fed is going to do. So even though it might not affect the long rate, which does affect, it is important for mortgages to be sure, it definitely will stimulate the economy for the short end.
So, Jeremy, the bond market is dealing with a lot. Maybe we're cutting into a 3% inflation rate, and maybe, I guess, critics of Kevin Hassett would say that he's not independent enough, or more likely to be more dovish than the market really calls for. But do you expect those things to come home to roost?
I think
or because that hasn't really happened yet, do you think the vigilantes will this raise the ire of people that watch it close? I mean, we're at 38 trillion in debt. There's a lot of reasons.
That's for sure. But, when the hints came that Kevin was the front runner, we did not see the long-term bond rate go up. I think the long-term bond rate is going up now because of what is going on. Two factors. I think one is going on in Japan. Certainly, I mean, they're, I think, at a 20 or 30-year new high on their rate, and that's important. And secondly, the fact that the economy is holding out well. The fear that this quarter might be the quarter where those tariffs were going to bite the economy, at least from the early news that we're getting. We're not getting any really significant dampening of sales. So that has been positive. So I don't think it's Kevin. I worked with Kevin. Kevin called me in 2000.
So sales are not dampening. Inflation is cooling. And you see those rates come down, baby.
Jeremy, you want to work on the John McCain campaign? He was the lead economic advisor, and I was second. He's a wonderful person, a wonderful economist. I don't think the market should have anything to worry about him.
Yeah, I agree. I tend to agree. Ty, what's up, buddy? Good to see you, man. Bruno says, appreciate you, Rob, for putting content every day with the crazy market. I guess it makes sense what is happening because no one expects it. For whatever reason, there is an issue processing a super chat. Yeah, only one super chat today. Very, very slim pickings. Wow. Going over to Bitcoin again. Let's go zoom in. Let's zoom back in. We are rejecting off the 30-day again. We got to get above there, guys. That's what we're watching for. So, anyway, I got some one-on-one coaching calls I got to get to over on the Patreon, guys. Get over there. We will be live. It is Monday. We'll be live on the Patreon at 6 p.m. Central as well. Do not miss the Patreon live tonight. 50% off right now, guys. Also, just so you know, we will very soon be starting a brand new gem list over there. So you're not going to want to miss that either. Plus, the series videos I did or that I'm doing breaking down how 2026 could play out, all possible scenarios, and how you should be responding to them. All that and more, guys, over on the Patreon. Again, it's 50% off. Do not miss the sale. It's only once a year at Christmas time, and that's it. So lock it in. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.